Wonder why people lose money in the stock market? In this video, we are going to see how people lose money in the stock market by doing 5 common mistakes. Before we get into the topic, if you are a first time viewer to our channel, make sure you subscribe and press the bell icon so that you don't miss any stock related updates and chart readings. In the end of this session, we have a small trading tip is waiting for you. FOMO trading. FOMO trading means fear of missing out. So a trader is watching the chart and suddenly sees a couple of big red candles. He thinks it has to be the one. I should not miss out this opportunity and initiating the trade. Guess what? He ended up making a loss. FOMO trading will make you taking every single trade you see. Thus, you will oversize your position and ending up in much more losses. So, how to overcome FOMO trading? Stay out of gossips about stocks from chat rooms and social medias. If you can't able to find a trade without the help of others, then stop trading and improve your trading knowledge. Revenge trading. If a trader makes a loss, he has this urge to make back the previous loss into profit, and this result in over positioning the size and increasing the risk of losing even more money. Making a loss in trading is acceptable and is a part of a trader's life. By doing revenge trading, my biggest loss ever on a single trade was 32,000. What is your biggest loss ever on a single trade? Let me know in the comment section. So, how to overcome this revenge trading? Trade smaller size so that your loss won't affect your emotion. Look into long-term view and success you're going to make. Take decision on logic, not on emotion. Don't expect to make money on every single day. Stop loss. Trading without stop loss will erode your entire capital just on a single trade. Keeping a stop loss is very important characteristics of a professional trader. Solution. You must have a stop loss on every trade you take. Place stop loss where how much money you are ready or afford to lose even if your trading setup is right. Cost averaging. Cost averaging method may work on long-term prospect but not on intraday trading. It just increases the risk and eventually you will lose more money by averaging on lower lows and higher highs. Solution for cost averaging: avoid averaging on intraday trading. Cut the losses, leave your trading screen and close for the day. Gambler's fallacy. Gambler's fallacy is thinking that a series of loss events will somehow affect the outcome of next event. Let me ask you a question. If you toss a coin 5 times and you get 5 times ahead, what would be the result of the 6th time? If you say tails, you are in gambler's fallacy. Let me explain how. The probability of tossing a coin is 50-50, right? So, the 6th time is also a probability of getting tails is 50-50 only. Most of the trader thinking that if you had 5 losing streaks trades in a row, the losing streak has to end, thus increasing the position, but the reality is you just increase your risk on a trade that has the same probability of previous trade. So, solution for gambler's fallacy is treat each trade independently from one another. So, that's it guys. If you want to be a professional trader, avoid those 5 common mistakes and have patience in trading always. If you like this video and found it useful, please like it and share it to your friends so that they avoid doing these common mistakes on trading. Here we come to the end of the session. Our small trading tip is always keep a trading journal. It will remind you your mistakes and make you not to do it again. Okay guys, we will see you on the next video.